So, on February 20th, AngloGold dropped its earnings report, and what happened next was just a masterclass in market psychology. The stock dipped, then it completely ripped higher, and it left a lot of folks scratching their heads asking, what on earth just happened? All right, let's get into it and really unpack the anatomy of this wild earnings reversal.
Right out of the gate, the story was just confusing. The headlines were telling two completely different tales. On one hand, you had a clear miss on earnings per share, $1.68 versus an expected $1.90. Now that is usually a recipe for a very bad day. But then you look over, and revenue came in hot, beating expectations by a good $80 million. So, which story was the right one to trade?
Well, the initial knee-jerk reaction was pretty predictable. The market zoned in on that EPS miss, and the stock fell over 1% in the pre-market. But then, something changed. As investors and analysts started to actually dig into the report, listen to the conference call, the whole narrative just completely flipped on its head. By the closing bell, the stock wasn't just in the green, it was up over 6%. That is a massive intraday swing. So the real question is, what did the market figure out that caused such a violent reversal?
Okay, the answer really comes in two parts. And the first part, it's all about defense. See, before the market could get all excited about growth, it needed to see some stability. It needed to know that the company was standing on solid financial ground. And what it found wasn't just stability. It found an absolute cash flow machine.
The sheer scale of this number, that's what really matters here. For the full year 2025, AngloGold generated a record $2.9 billion in free cash flow. Look, this isn't just a beat, it's a massive statement. It screamed to the market that, hey, despite cost pressures, the underlying business is incredibly profitable and ridiculously efficient at turning gold in the ground into cold, hard cash in the bank. So what did management do with all that cash? Well, they gave a huge chunk of it right back to shareholders, declaring $1.8 billion in total dividends for the year. This wasn't some token gesture. This was a massive capital return that showed, without a doubt, management's confidence and their commitment to rewarding investors directly. Now, this number right here might be the most important defensive metric of all. After paying out those huge dividends, AngloGold still ended the year with an $879 million adjusted net cash position. They swung from having net debt just the year before to having a fortress balance sheet. This just takes a ton of risk off the table and gives management incredible flexibility.
And the CEO's own words just calmed any lingering nerves out there. The message was crystal clear. Our business is strong, we are confident, and we are putting our shareholders first. This foundation, this financial strength, was the first crucial piece of the puzzle that turned the market sentiment completely around.
So with the balance sheet totally secured, the market could shift its focus from defense to offense. And this brings us to the second, and you could argue, much more powerful driver of that rally, the growth story. And let me tell you, it's a big one, centered on a massive project right in Nevada. Now, before we get to the project itself, we really need to understand this term. A Tier-1 asset is what every major mining company dreams of finding. It's the kind of project that can define a company for decades. We're talking huge production for a very long time at low costs and in a safe place to do business like the United States. It's the holy grail of mining. And this right here, this is that prize, the Arthur Gold Project. The numbers are just staggering. An initial reserve of almost 5 million ounces, a 9-year mine life right out of the gate, and 500,000 ounces of average production every single year. Yeah, the initial price tag is significant at $3.6 billion, but the market saw this not as a cost, but as an investment in a multi-decade Tier-1 growth engine.
And once again, the CEO's words just hammer the point home. He's not just calling it a good project, he's calling it a defining asset. Now, that's the kind of language that makes big institutional investors sit up and pay very close attention. The market was no longer just looking at one quarter's cost pressures, it was now looking at a brand new world-class mine.
Okay, so we have the two T pieces of the puzzle, the cash machine and the Tier-1 prize. Now, let's put it all together and really understand the investor calculus that drove that incredible 6% rally. How did the market weigh the pros and cons on earnings day?
So the initial doubt, that came from the EPS miss and the guidance for higher costs next year. That was the bear case, plain and simple. But it was completely overwhelmed by the bull case. The safety net was that incredible $2.9 billion in free cash flow and that net cash balance sheet. And the knockout punch? The Arthur Project, a clear, tangible, multi-year growth story. The verdict on the day was decisive. The long-term prize was worth far, far more than any short-term noise.
And we know this wasn't just some small group of investors pushing the price around. Just look at the volume. Trading volume on earnings day was nearly 3 times the previous day's total. This wasn't a head fake. This was a major shift in sentiment backed by a massive flow of capital. The big money decided the bull case was the right one, and they voted with their dollars.
So that explains the earnings day reversal. But here at Talk Tickers, our focus is always on the next move. What does this all mean for the stock from here? This is what we call the next call.
Our rating is clear: outperform. We believe the market correctly identified the long-term value here, and we think the positive re-rating for this stock has only just begun.
So here's our forward-looking thesis. First, the entire conversation around this stock is going to shift. It's not going to be about quarterly cost guidance anymore. It's going to be all about de-risking the Arthur project. Every permitting update, every engineering study, those become the new catalysts. Second, we expect the stock to keep outperforming its peers in the GDX ETF as the market assigns a higher and higher value to its premier U.S. growth pipeline. And finally, for a potential trade idea, some investors might look at long-dated call options to express this bullish view. The thinking there is that it could provide some leveraged upside to positive news on the Arthur project over the next year or two.
And, as always, we have to close with our standard disclaimer. The information and analysis presented in this explainer are for informational purposes only. This is not financial advice. Please be sure to conduct your own research and consult with a professional before making any investment decisions.